Hey guys, how's it going? It's Andy. This week I worked 410, so I didn't have time to make a video until right now. But I made a poll asking what type of video you guys wanted to see, and the winner of that poll was how I would start investing with $1,000 into a dividend investing portfolio, and that's what we're going to be doing today. Somehow, if you don't know, dividend stocks pay out a dividend either monthly or quarterly, which pays you cash that you can do whatever you want. You can use it to pay off bills, you can use it to buy other stocks, or you can reinvest it back into that same stock. And I think it's a great option because one, these dividend stocks on average are less volatile than the overall market. These are stocks that are more resilient to the stock market falling, which you've been seeing right now. And I think it's a great way to take advantage of the stock price of many stocks falling, because as a stock price falls, the dividend yield increases. Because the way dividends are calculated is the amount of payout annually over the overall stock price. And as the stock price decreases, the yield is going to increase. So I think dividend stocks are a great option right now. This is going to be a longer video because I want to give a full breakdown and explanation of how I would start fresh right now, because I know a lot of people, as the stock market is falling, they're looking for safe opportunities and they're looking for ways to maybe find a type of stock like dividends that they haven't considered in the past. This is going to be a longer video, so timestamps will be down below if you want to skip around to a part that you're more interested in. And in this video, I'm going to be talking about a few main parts. The first thing I'm going to be talking about is the best platforms to use, because not all platforms are made the same. Some have benefits when it comes to their interfaces on the app or on a desktop. Some of them have dividend reinvesting. Some of them have fractional shares. I'm going to talk about what I look for, why I picked the platform that I use, and I'm just going to go over a couple of the more popular options out there and talk about some important things that you need to know before getting started. Then we're going to be talking about some important terminology. I already mentioned yield, but we're going to be talking about yield versus dividend growth, which one I prefer to give more weight to, and what's important to look at when it comes to dividend yield. Next, we'll talk about how not all dividends are viewed the same. While they are paid out in cash, they have different weighting when it comes to the IRS and how you pay taxes on them, and I think it's important to understand what type of tax benefits each of these stocks have and why they're not all made the same. Then we're going to be talking about how many stocks I would put into my portfolio right now. This is a very difficult question to answer, and I'm going to give my best kind of answer to it for what makes sense for me as a dividend investor. Then I'm going to wrap up the video talking about some of my favorite dividend stocks and create a sample portfolio for if I was going to start fresh right now. I'm going to give 8 stocks that I really love, broken down into a couple types of categories for these stocks, and you can either replicate that with stocks that you love, or you can tell me in the comment section down below what type of stocks you guys would like to buy right there. Gotta say, this is not financial advice. This is just how I would start fresh and some important things that I would want to know if I was getting started right now. So let's talk about something that I think is really important to discuss, especially with the title being $1,000, because when I made my portfolio video last week, or maybe that was 2 weeks ago, I got a couple comments talking about how they expected my portfolio to either be larger or just shaming me for having a smaller portfolio. And I think that's absolutely against what I'm trying to do on this channel. Dollar amounts are not important whatsoever. The reason I started making videos in the first place is because a lot of channels were talking about investing with $100,000, and they'd only talk about the dollars that they made, not the percentages. The reason I use percentages in my videos is because a 1% gain is the same for myself and it's the same for everyone else. My portfolio gaining $1 is very different than someone else's gaining $1. So it doesn't matter how much you start with. You can start with as little as like $5. The important thing is consistency and continually growing and adding to your portfolio. So I just wanted to put that disclaimer at the beginning. So let's talk about which broker I would use, because if you've been watching TV, being on the internet, you'll see ads for all these different platforms, and I wanted to talk about some of them. There are things that I look for. I'm looking for the app and website interface. I want to make sure that they have fractional shares, and I want to make sure that they have dividend reinvesting. So I want to talk about why I think these are important. For the interface in the app, I think it's important to have a platform that's easy to use. TD Ameritrade, I think, was great for their trading platform, but their interface on their app was so difficult to use, and it really pushed me away from checking my account, doing things that would help me grow my knowledge into the future. And that's why something like a Robinhood that may not be the best for experienced traders became so popular, because it's very easy to use and they're very transparent at what you're looking at and why it's being shown. Fractional shares are important because not all stock prices are the same. If you wanted to buy a share of Amazon, it's going to cost you $3,000. And if you're going to be starting an investment account with $1,000, you can't buy a share of Amazon if you wanted to. So it allows you to buy the percentages of stocks, kind of similar to why I talk about my stocks going up by percentages and not dollar amounts. So it allows you to buy stocks that you want and not have to worry about how much they cost. Dividend reinvesting, it allows you to be more hands-off when it comes to your account. You're just going to be buying into a stock, and then when the dividend gets paid out, it gets automatically reinvested and you don't have to worry about that. So let's go through the different options. The first one, and the one I use, is Charles Schwab. Charles Schwab does have dividend reinvesting and fractional shares, which is fantastic. There's a $5 minimum for what they call the stock slices, and you can only use it on stocks that are traded on the S&P 500. So this is going to be less than some of the other options out there, but it is the one that I use currently. And the app and the website I think are decent enough to use, and that's why I switched from TD Ameritrade over to Schwab. Next, Fidelity, you have yes to fractional shares. There's a $1 limit and you have options of 7,000 stocks. Yes to fractional shares and dividend reinvesting. So Fidelity, good option. I just picked Schwab over it. Then you have Interactive Brokers, also known as IB. Yes to fractional shares for around 11,000 stocks and ETFs. Stocks are eligible if they have a daily volume more than $10 million or if their market cap is above $400 million. But they have a no to dividend investing, so that's why I'm going to cut that off of my list. Next up is Robinhood, yes to fractional shares. They allow you to do fractional shares on stocks that are more than $1 and have a market cap over 25 million. Yes to dividend reinvesting. It's a super easy app to use, and I think it's beneficial that way. People do have a sour taste in their mouth based off of previous history with the GameStop situation, where they stopped people from being able to trade certain stocks. So some people have a sour taste in their mouth when it comes to Robinhood. It hasn't been around for very long. That's personally why I'm not picking it, but I think it's a fine option for newer investors. Next, we'll go to TD Ameritrade. No to fractional shares, which is why I moved away from it in the first place. Yes to fractional dividend reinvesting. It was acquired by Charles Schwab in the past year, so you would expect it to have fractional shares in the future, but as of right now, they don't, and that's why I'm not using it. I think any of these platforms are decent enough to use, minus TD Ameritrade, and the other one was, what was it? Interactive Brokers, because they don't have dividend reinvesting. You have options out there. I just personally picked Charles Schwab because it's a platform that I'm pretty comfortable with. Next, let's talk about some important terms with yield versus dividend growth, because when you're going to get into dividend investing, it's different than the normal things that you'd see with normal investing. You have stuff like yield. Yield is calculated, as I mentioned, by the payout of the dividend over the current stock price. And this would mean that if you have a $100 stock with a 1% dividend over the course of a year, you're going to be paid out a full dollar. Some stocks will be broken up monthly, but for the most part, most of them are going to be quarterly. So would it make sense to pick a stock with the highest dividend yield? No, it actually doesn't, because as a dividend yield increases, the likelihood that a stock is able to increase that dividend and pay it out reliably decreases. This means that as a company is paying more and more of their earnings as a dividend, there's more risk associated with them. So there's kind of a sweet spot that you're looking for. And one of the ways that you find that sweet spot is you're looking for stocks that have increased their dividend payout over the past 25 years. You have these two terms of stocks: dividend aristocrats, which means that they've increased their dividend payout every year for the past 25 years, and dividend kings, meaning they've done it for the past 50 years. This shows that a company is reliably able to pay out a dividend and be able to allocate enough funds that it's not at any risk of being cut in the short term. One of the recent examples of that is AT&T, ticker symbol T, was a stock that was paying around a 7% dividend, which looks great if you don't look at why the dividend yield is so high. But it came out pretty recently that they're going to be cutting their dividend in half. And as a dividend investor, that's a huge reason why people are going to pull out of the stock. So the stock price is going to fall and the dividend yield is going to get cut. I also think it's important to know that the dividend growth is the payout, not the percentage. So a stock can increase the payout and that'll count towards the increase. Doesn't matter about yield. As the stock price goes up, yield can decrease, but the payout, the annual payout, can increase. So I think that's just important to talk about. Next, let's talk about why not all dividends are viewed the same, because when you look at investing in a normal stock, once you sell it, you have to pay taxes. If you held it for less than a year, it's going to be taxed differently than if you held it for more than a year. Qualified dividends are paid out in the tax bracket that I have on the screen right now. So since I made under $40,000 last year, I'm going to be paying 0% on the dividends that I made. But I mentioned qualified dividends. There are different types of dividends, and when you look at a very interesting type of stock with an REIT, a real estate investment trust, these dividends are paid out in a different way. One of the ones that I own right now is Realty Income, ticker symbol O. And when you go to their website, you can see how the dividend is going to be paid out and how it's going to be viewed on your taxes. When you look at it, 1.75% of it is going to be viewed as dividend income and is taxed at the capital gains rate that I mentioned previously. So I'd be taxed at 0%. 30.96% is taxed as income, which is taxed with this current tax bracket. And then finally, you have the non-dividend distributions. These are payments that are viewed as return of capital. So if you buy stock for $14, they pay you $1 in dividend, your cost basis is going to decrease to $13, and you're not going to be taxed until you sell when your cost basis is 0. That's why the benefit of these stocks is you can put them into a tax advantage account like a retirement account so that when you do sell, you're not going to have to pay taxes on those gains. But since my portfolio is very small at this point and we're starting with $1,000, as of right now, I'm not too worried about that, but as your portfolio increases, that is something to take into account. What I'm trying to say is that not all dividends are viewed the same. I think it's important to understand the difference between a qualified dividend and some of the ones that I mentioned with the REITs, because when it comes to tax season, they're going to be viewed differently by the IRS and you're going to have to pay taxes on them differently. So just important to know. Next, let's talk about how many stocks I think you should have in your portfolio. This is a very difficult question because the types of stocks that you own are going to change the answer. When it comes to growth stocks, I think you need more options because if a stock plummets, maybe they have bad earnings or the stock is kind of falling apart, there's a huge risk associated with that. But as the stock increases in value significantly, it's able to offset some of the losers. Dividend stocks are different because for the most part, they're going to be more reliable and less likely to have a flash crash. So when I'm looking at the number of stocks to own, I think anywhere between 8 and 20 stocks is fine. I personally like picking stocks that I fully understand the company, so it kind of limits the amount of stocks out there, but I think 8 to 20 is a pretty decent number and it can change over time. Right now, my current dividend investment portfolio has 13 stocks that could increase or decrease in the upcoming months, but as of right now, it's sitting at 13. Next, let's talk about an example portfolio. This is what probably people are looking to see. I'm going to break it down into 8 stocks total. This can be increased to as many as 20, to whatever you like, but this is the kind of the simple portfolio that I'm looking at. I'm going to put 25% of my portfolio, which is going to be 2 stocks, into blue chip tech stocks. You can argue that these are not dividend stocks. They do pay a relatively small dividend, but these are stocks that are incredibly reliable. They've had very steady growth, and I think you can put them into that safe dividend type of stock that you're looking for. So the first stock I'm going to be putting in there is Apple. It does have a low dividend yield of 0.52%, but it's been incredibly stable. When you look at its returns, it's returned 26.6% on a compound annual growth rate basis over the past 25 years. When you're looking for stability, I always think of Apple. Then you can think of its brother with Microsoft, ticker symbol MSFT, which is going to be my second stock in this portfolio, which has returned 18.22% on a compound annual growth rate basis and a dividend yield of 0.84%. The next 50%, which is going to be 4 stocks, are going to be classic dividend stocks. These are ones that you think about when you think of dividend stocks that are not going to be super flashy, but have performed super well over the past 25, 50 years. The first one I want to talk about is McDonald's, ticker symbol MCD. McDonald's has a dividend yield of 2.16% with 45 years of consecutive dividend growth, which means that it's a dividend aristocrat and it's pretty close to becoming a dividend king. It has returned 12.6% on a compound annual growth rate basis. This is one of those stocks that you think of it as being a fast food stock. The more you look into it, you realize it's a real estate stock. I think it's super interesting, and I think McDonald's is a great option, which is why I put it first on this list. Then we're going to go with PepsiCo, ticker symbol PEP, which has a dividend yield of 2.55% and 49 years of dividend growth, meaning that it will become a dividend king next year, which is pretty exciting, and has grown on a compound annual growth rate of 10.55%. Next, we're going to go to a energy and a renewable play with NextEra Energy, ticker symbol NEE, which has a dividend yield of 2.05% and 26 years of dividend growth, meaning that it is a dividend aristocrat. It has grown since 1996 and has grown at a compound annual growth rate of 14.74%. Next, we're going to go with an investment management company, BlackRock, ticker symbol BLK, which has a dividend yield of 2.53% and 13 years of dividend growth. While it does not have as many years of dividend growth, it makes up for it with a compound annual growth rate of 21.84%. When you're looking for stocks that I put in this classic dividend category, I'm looking for a yield between 2 and 4%. Something where I'm not worried the dividends are going to be cut, but it has had reliable growth and has outperformed the S&P 500, which all 4 of these stocks have. Next, I'm going to put in one REIT stock. You can pick your favorite. My favorite is going to be Realty Income, which is ticker symbol O. It has a 4.4% dividend with a monthly payout and 27 years of dividend increases. I think the monthly payout is super exciting, and that's why I've added it to this list. And it has outperformed the S&P 500 with a compound annual growth rate of 14%. And then I'm going to finish up my portfolio with something to hedge the overall market. Dividend stocks are great because even as the stock market falls, they're going to pay out their dividend. But I want something that's going to hedge as the market continues to fall. And I'm going to go with the NASDAQ covered call ETF, which is going to be QYLD. This is a weird stock because it sells covered calls against the NASDAQ, meaning that as the stock market goes up, it's going to limit its upside potential. But as the stock market falls and as volatility increases, these contracts are going to be worth more. And that's why the dividend yield is going to be so high. It currently has a dividend yield of 11.7% and is paid out monthly. It is also taxed similar to realty income, ticker symbol O. It's taxed on return on capital, meaning that it's going to be lowering your cost basis until it reaches zero. It would be nice to have the tax benefits of putting O and QYLD into retirement accounts, which they are part of my retirement accounts currently. But with a smaller portfolio, as I mentioned earlier, I'm not super worried about the tax implications of it. As the portfolio increases in size, maybe I'll move it out of there and put that money into the retirement account. But as of right now, I'm not super worried about it. And I'm going to put up on the screen right now kind of an example of what I do every week. While it's important to put in money in the first place, I think continually adding to the portfolio is super important. The way that I have it set up right now is that every Monday I put in $50. When it settles on Tuesday, I wake up and I'm going to put on the side right now how I go about it. I open the app, I go to stock slices, and I pick some of the stocks that I want to add from my 13 different stocks that I own at that point. Kind of click through, break it up. And then the really important part is hitting dividend reinvesting, just so I don't have to worry about that in the future. Everything will be handled for me. Once I pick the amount of stocks I'm looking to buy at that single time, these can be because either the stock has gone down significantly in the past week, or it's just one of my favorites. I'll go to the end, make sure everything is clicked correctly, and buy the stocks. So yes, you don't need that much money to get started, but it's very important to continually add because dollar cost averaging is super important, and I'm going to talk about that in a future video because I think it was second place on the poll that I put up this past week. If you have a recommendation or a topic you'd like me to talk about in a future video, be sure to leave it down in the comment section down below. If you made it this far, wow, look at you go. Really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. Thanks for watching this video. I appreciate all the support, and I will see you in the next video.